We are now going to move to our next segment of our event, which is a focus on energy segment. And it is my pleasure to invite Mr. Eric Granskog, the CEO of Milele, who is here with us and will lead us through this session. Eric?
Yeah, thank you very much. Hi, I'm Eric Granskog, CEO of Milele Energy. I started working in Africa 25 years ago and have seen tremendous change and growth over this time. And it is currently a place where we call home. I live here in Nairobi with my family. In 2019, we launched Milele Energy as an innovative platform focused on bringing clean energy to a growing continent, making a positive impact to the environment, to our investors, and to our customers. So now I'd like to walk you through a few pages of our intro deck to highlight the opportunities in African energy and how Milele is working to address them. So boiling it down simply, the challenge. 600 million people on the continent do not have access to electricity, and the cost of reliable energy is amongst the highest in the world. Investors who may want to invest in the sector don't have available opportunities. So looking then forward for Milele, the solution, building a clean energy platform where we bring risk mitigation, bring proven best-in-class deal screening to improve hit rate and financial results. Pragmatism. Government budgets are stressed, so they need to rely on fewer guarantees and ensure projects make sense and lower the cost of power. Collaboration. We have first-class collaborative team on the ground here in Africa with the network and passion to make a difference. Market size. The addressable market is huge. Over the next few years, $220 billion needs to be spent on the African energy sector. Over 50 billion of that is not budgeted. That leaves open the opportunity for the likes of Milele and other platform investors to participate in the energy sector. The 21st century is going to be an African century, set to boom through the middle of the 21st century. Africa's population is set to double to 2.5 billion by 2050. 600 million people will have access to electricity. We will connect them. These factors point to the fact that 15 of the 30 fastest growing economies in the world are here in Africa, all of which filter down to consumer power, with spending and consumerism expected to reach $2.5 trillion by 2025. So one key market opportunity is, of course, renewable energy. The cost of renewables have come down significantly. Hydro is already a major source of power in Africa, but only 11% of the resources have been utilized. South Africa has made impressive strides in wind power, and there are great opportunities across Africa. And when you think about Africa, you got to think about the sun, you think about solar. Solar-powered opportunities are endless and scalable and low cost. So why Milele? We are an experienced team based in Africa. We have an execution focus. We know how to source and structure deals that are urgently needed. We've been working the Milele pipeline for acquisitions and development opportunities over the last 18 months. So we have a great head start to positive cash flow. Experience. The Milele management team achieved success together as we work together at GE Africa and over these last 18 months, and bring that passion for doing what's right in all respects to our business. We've also focused on clean energy, but that includes gas projects to provide low-cost baseload power that's required to help integrate renewables. And we also offer investors the opportunity to invest specifically in a renewables energy platform. So now I'd like to introduce my GE colleague, Michelle van der Westhuizen, a Senior Vice President of Development, who's joined us earlier this year. She's currently sitting in Sierra Leone, working on one of our projects that is in advanced development. Michelle, off to you.
Thank you, Eric. As Eric said, my name is Michelle van der Westhuizen. I recently joined Milele after enjoying a long career at GE, where I started as an M&A lawyer in the energy space, before crossing over to have a lot more fun in the project development area. As Eric said, the Maleli Energy team brings over 100 years of project development experience. This translates to 5,000 megawatts of power on the grids globally, and in the last decade, focused on Africa. With this proven track record of working together as GE, the Maleli team is very excited about being able to reconnect and deliver projects through the Maleli platform. Maleli, as I've said, is passionate about putting megawatts on the grid where it is most needed. Maleli's pipeline does and will continue to focus on projects that, one, there is a significant need, two, where Maleli can aid the transition of a country from dirty fuels to cleaner fuel alternatives and renewables. And third, where we can leverage long-term partners in both the public and private sectors to close transactions in a way that poses the least burden on the local governments. We strongly believe that project development is a ground game and that local partners are imperative to our success. Additionally, being on the ground ourselves, we are committed to being physically close to the projects to drive success. As Eric said, I'm currently in Sierra Leone, where we are redeveloping an HFO project to move towards LNG with the transition of LPG. This is the Western Area Power Generation Project, one of the most advanced projects in the Maleli pipeline. Its completion will not only demonstrate the synergistic skills of the team, but also the power of established relationships like that with the DFC, who are the sole lender to the project, bringing in 150 million in debt. The USTDA, who have been a remarkable partner through the development process and who have funded approximately $1 million of development expenses. GE, who are replacing the HFO-fueled reciprocating engines with more efficient aeroderivative technology and will be providing long-term services to the project. And then, of course, our long-term trusted advisors. But more about the Western Area Power Generation Project and Sierra Leone later. Thank you. Eric, back to you.
Thanks, Michelle. Really appreciate it. So now I'd like to introduce Jay Ireland, who many of you may know. He was for years based here in Nairobi, the CEO of GE Africa, and he's recently joined us as executive chairman. So Jay, welcome.
Thank you, Eric. Great to see everybody. And again, congrats to the team. I wish I was in Nairobi with you for the office launch, but I'll be there soon. As you heard, I lived in Nairobi for my last 8 years of my career at GE, so I know very well the issue of the energy deficit across sub-Saharan Africa. I obviously had run a company that was an equipment supplier to the power sector, as well as a project developer, and also a financier. So I've seen, along with Eric and Michelle, all sides of deals trying to solve the energy deficit across the region. We all know about the demand for power, and the issue is going to be the supply. And the challenge in that is really getting bankable projects. And bankable projects are always ones that have to consider all levels of the value chain. And I think one of the things that happens throughout the time is the value chain needs to be economically viable on each segment. Fuel supplier, generation, transmission, distribution, and then to the customers, whether they be consumers and or businesses or governments. And most importantly, the economics have got to work for each segment of those. And we need to see the reverse of the value chain, where the payment comes from the customers back through to the fuel suppliers. And I think that's one of the aspects, based on our experiences of doing projects across the continent, that we feel that we can bring some added value because of that knowledge. And I think one of the other big pieces from the standpoint of investing in Africa, especially in the energy sector, is making sure that you don't have a lot of long-term tie-up of capital with no returns. And part of that is basically doing more project work, project development work up front. And one of the things I'm happy about Mullally is the amount of projects and the level of completion of these projects to start to get to financial close. So we will see as quick as possible utilization of capital. As Eric said, all fuel capabilities should be utilized in solving Africa's energy deficit. All renewables, definitely a key focus, but at the same point in time, you have to think about integrating gas power and some others, just to make sure that we understand the ability for the grid to handle the renewables, as well as making sure the consistency will continue across the grid and the utilities. One of the things I'm very pleased about is the ability to come back in Africa's energy sector and hopefully solve the energy deficit that we've all seen across sub-Saharan Africa. A lot of work has been done over the last decade, and I think the flexibility in project size and project capability is going to be a key to Mullally's success. And I look forward to working with all of you and in solving the energy issues, so we can see continued economic performance and growth in the sub-Saharan African continent. Thanks.
Jay, thank you very much. Great to see you. We look forward to seeing you back here in Nairobi, and we look forward to a very fruitful relationship together with Mullally Energy. So also want to encourage people to put in questions into the chat. We want to make this interactive, so we'll at the end of our speakers here, we'll be able to address questions. And certainly if not, if we can't get to all of them, we would look forward to having one-on-ones after this session. So now I'm honored to welcome a great friend and champion of Africa, Andy Herskowitz. Served as many years as the coordinator for Power Africa, and now serves as the Chief Development Officer for the DFC, Development Finance Corporation of the US, formerly OPIC. So Andy, great to see you today, and welcome.
Great, thanks so much, Eric. Asante sana. It's great to see everyone, and I also wish I was on the ground in Nairobi as well, having launched Power Africa from Nairobi and spending the first year there. It's a little bit frustrating for me to hear Eric start off by saying there's 600 million people on the African continent and don't have access to electricity, because that's the same line that we used 7 or 8 years ago when we first launched Power Africa. And it hasn't changed that much. We made a tremendous amount of progress, but not nearly enough progress. We've learned a lot along the way, but one of the keys to learning is having people on the ground. And so I love the fact that Everstrong, just like GE, was on the ground in Nairobi and in the country where some of the most exciting developments are happening, and working with the government that really has been a leader on the continent. Most US companies, when they head to Africa, they go to South Africa, but where all the action is really in Nairobi. I see it both at the large scale power sector level, but also in the off-grid space as well. So the only way that you really learn and you have an impact is getting to know the market and getting to know the people and the players, and having a really nuanced understanding of what the issues are, because the issues are very complicated. One of the things that Jay mentioned was the importance of not just addressing the power generation issue, but also looking at transmission and distribution and fuel supply. The other issue that we've learned is it's not just making sure that all the different pieces of the sector work together, but that all the pieces of government work together as well. With Power Africa, we learned about how to make the US government work as one, and it's been incredibly effective, and that's been replicated. But also it's important that our counterpart governments are all working as one, that the Attorney General and the Minister of Finance and the Minister of Energy are all on the same page. And one of the things that Power Africa did, and Jay played a key role here, was bringing a lot of those folks together to make sure that the sector was moving in the same direction. And I hope that we can continue to do that. At DFC, the U.S. International Development Finance Corporation, which is the successor agency to OPIC, we have an extremely strong commitment to the power sector, the energy sector, to Africa as well. We already have $5 billion of investments in Africa. Our energy portfolio overall is $10 billion globally. And we just, I'm sorry, it's $11 billion, but we just launched a new development strategy that focuses on 6 sectors. And one of those sectors, I had a little role in drafting this strategy, is the energy sector. And we've committed to doing $10 billion of investment in the energy sector over the next 5 years. And that's a real commitment based on our historical investments. This is something that we can do easily. But one thing that's going to be a little bit different about this, I'm hoping, is to nudge the portfolio more towards the direction of Africa. I get very frustrated when I see a different solar project getting screened in India almost every week at DFC, a large scale one, a 300 megawatt solar project. And I keep wondering where all of the Africa projects are. So we're counting on Everstrong and others like Everstrong to continue to bring deal flow to us, because we have a tremendous appetite for financing these types of projects. And we're also recognizing that we're going to have to do it a little bit differently. We're going to have to take more risk as well. We understand that there are a lot of risks associated with investments in many of the African countries, and we have to work with governments as well, as a whole of government, to address some of these issues, whether it's currency convertibility or making sure that there's some sort of guarantee for the off-taker, looking for what new tools we can develop. So we're really, really excited about this. I'm really excited about Everstrong and working with Everstrong, not just in Kenya, but across the continent. You've got an outstanding team, and you've got the US government's full backing to work with you. So thanks, everyone.
Great. Thanks a lot, Andy. Thanks for joining us today. Your legacy is doing quite well here in Africa. Power Africa is a great partner for us and many other companies. DFC is also the sole lender that is working with us on our project in Sierra Leone. So thank you very much for that. So unfortunately, we would also like to have a speaker from Sierra Leone right now, Mr. Abu Kumar, who is the head of the PPP unit under the vice presidency in Sierra Leone, but he was called to Parliament and probably walked into the door there 5 minutes ago. So unfortunately, he can't join us. So what I'd like to do now is then switch back here to Kenya. And I have the pleasure of introducing Mr. Ken Canoe, who's the CEO of Britam Asset Management, and they are a partner with Everstrong in the asset here that we own with Britam, the Gulf Power Project in Athi River, Kenya. So Ken, thanks for taking the time to be with us today.
Thank you. Thank you very much for having me. I think just to acknowledge the presence of the U.S. Ambassador to Kenya, Mr. Karl Makata, our Cabinet Secretary to the Treasury, Mr. Yatani, the CEOs of the CMA and the RBA, most certainly to Phil. I think congratulations on this very momentous occasion of the opening of your Nairobi office. And I think truly, Phil, were it not for your own personal tenacity, patience, and persistence as well, you potentially would not be counting Britam as an investor. So well done to you. I also want to congratulate the members of your team, both here in Nairobi, the US, and in South Africa, for the great work that they are doing in terms of advancing, let me say, Everstrong Capital's goals and objectives. I'm here as the CEO of Britam Asset Managers. I'm one of the, let me say, I heard myself being called one of the pioneer investors into Everstrong Capital, and I think it's been a great investment journey with the team over the last, let me say, 1.5 years of the investment. and perhaps another 1 year's worth of due diligence and interrogation and probing, which I saw that Phil and his team stood up to very well. Just by way of introduction, Britam Asset Managers is a 16-year-old asset management company set up here in Nairobi. We are focused on the Eastern African region from the point of view of both institutional and retail investors. We manage now just over $2 billion worth of assets under management, investing into listed bonds, listed equities, cash, private equity, real estate, and now infrastructure. We looked at this particular asset that we invested into, which is a medium speed diesel power plant located in Athi River. It's an 80 megawatt heavy fuel oil project. We looked at it and we liked it because it was a project that had already been tested and commissioned 4 years prior. Strong power purchase agreement, strong and stable cash flows behind it. And to be honest, having done the work, we thought that we liked the asset. But rather than go in directly, we thought that we would partner with Everstrong Capital as the fund manager for the investment because of the specific expertise that Phil and his team proved to actually have. So beyond doing a due diligence on the asset, we also performed a due diligence on Phil and his team. That was 1.5 years ago, before obviously the opening of this wonderful office and before the hiring of the very well qualified individuals that I've then seen. And we found it fit, I think, as Britam to proceed with this investment. We invested into an entity called Everstrong Power, which is a fund controlled by Everstrong Capital. The structure of the investment was debt. We invested the equivalent of 1.4 billion Kenya shillings, so just north of $14 million. And it's a 5-year instrument. The cash is coming through at a wonderful sort of rate. We invested euros and executed across currency swaps, so we're getting a fantastic return in shillings because of the depreciation of the local currency. So for us, I think it seems to be working. And I think in as far as diversification of our investment portfolios is concerned, we've really seen the investment carrying its weight, particularly during the time of this COVID-19 pandemic, when really we've seen listed valuations go into the floor and the valuations of other assets really get out of whack. We've seen this particular one hold its own. It is stable. The cash flows are coming through. So truly, I do feel that from the point of view of any local institutional investor, it will be well worth their while to consider a closer look at the asset class. So I think Phil and team, congratulations once again. Thank you for giving me this opportunity to participate in the opening of your Nairobi office, albeit virtually. I do hope that as things begin to improve, you will then host us physically in your office, because obviously, Phil, it's not good for me to say we've invested all that money and truly I've never seen your office. I say that tongue in cheek, but once again, congratulations, and you can certainly count on the support of Britam Asset Managers as you then go ahead to pursue your goals and objectives. Thank you very much. Appreciate it.
Mr. Kanu, thank you very much for your time. Appreciate your kind comments, and we look forward to further expanding our relationship with future investments going forward. So now in the interest of time, I'd like to turn it over to Nima Kamau, who will help lead us into the Q&A session.